Good afternoon, traders. Chris Buss here with Traders Profit Compass with your midday market pulse for Thursday, April 29th. Okay, got a lot going on today. Thought it warranted an update here. Let's run through the indexes and FATMAAN names to see kind of where we're at this morning. We had talked about watching those opening gaps that we had really all across the board: SPY, QQQ, IWM, Apple, Facebook, all of them. And as you know by now, they faded that gap and filled it. So for SPY, this is not a good look as it sits right here. Why? Because we've fallen back into this large trading range between 410 and 418. What the bulls want to see and what's kind of forming right now, too early to tell how we're going to end up, but you don't want to close the day inside this trading range. Bulls want to see that 418 reclaimed, and then the way that'll look at the end of the day is simply a breakout and a back test, and that would be, that would be fine. That would keep everything hunky-dory as far as the bulls are concerned. Let's look at the SPY 30-minute chart, and here you can see the opening candle and then the big fade. Came right down to our 416.75 level, which was the bottom of this trading range. It respected that level. So going forward this afternoon, if they put in, a little Fibonacci bounce here, bring it up, see if they can close above 418, which would be good for the bulls. But if they end up fading it and break below this 416.75, that would bring in a new wave of sellers, and then you'd be looking at the potential of coming down towards the bottom of that box, down towards 411.50, 410.50, down in that range. Should this level break, that would open the door to find some of these lower levels here. Qs had the gap up, but as we discussed in the morning video, 342 was key and just did not have the horsepower to go through there. So that remains stiff overhead resistance at 342. They brought it back. Now they're putting in a little bounce. I would expect some resistance here at 340. So, if you're actively trading that, let's look at the 30-minute chart. These are all live. These are all going right now, so this is in real time. You're going to get some resistance right here at 338.50. You can see this well-defined support level with all these tags that held, and then this one broke, brought it right down to this 337.25 level, and now we're bouncing. This is going to be an important level to clear. And if you were not a buyer here at 337.25, if you reclaimed 338.50 and you're an active trader and you're going to stay on top of it, that could be a location where you could put in a buy and see if you don't get a follow-through bounce up to even 340. But this is definitely, a bearish development. Fake breakout here, came back into the range, and then it just, let go from there. So watch for resistance right here at 338.50. I think you're okay taking a long above to see if you can get a follow through on the bounce. But if you see that rejected there, you could be short against 338.50 with a stop just above, and then look for a move back down to test this low. And you know what? That's what we often see. You see the initial plunge, a bounce, and then they come back to validate that low later on in the afternoon. We'll have to see if that plays out. But Q is definitely under pressure. IWM, same kind of a deal. Fake breakout here, and then it let go and came back down. actually filled this gap. Let's look at the 30-minute blow up. Here was the fake breakout. Once that failed, came back into the range. What do we always say? The bottom of the trading range is your target. Down here at 227.50, actually broke that level. Then your target was the top of the gap. That failed, and then you got the gap fill down to 225.76, near perfect tag of that. So now on a bounce, could get rejected right here at the top of the box, or make it back up to 227.50, where all this action here will act as resistance on the way back up. So be ready to fade a move into 227.50. I would think you'd get a reaction there and possibly come back down. But those are your key levels. As far as further downside, if you break this 225.50 area, resistance, 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 breakout. So this 225.50 should be solid support, I would think, on the way back down. If that breaks, then you're back into the 223s and possibly 220s. So we'll take that whenever it may develop. But that's an important level here at 225.50 to kind of stem the downside, at least for today. Moving on to Facebook. Had some initial weakness and has now recovered the bottom of that opening candle, which is a positive development. Going forward, we've got this big gap. You don't want to see today's lows be taken out at approximately 322. If that happens there, then you got further downside. But as long as this recapture of this level here at, 325.50, I think that's positive. And if things keep bouncing, could get a move even higher. Apple, we talked about 137, 138 areas being really important. You can see we tagged it right out of the gate, and then it failed. And then once it failed, came back down into the prior trading range. This is not a bullish look. Yes, it held 133, but your real support is down here at 131.50. I wouldn't be surprised if this puts in a little baby bounce and then ends up coming back down to 131.50. So, as far as actively trading goes today, if you were on top of it and really watching it, and you saw that tag and rejection, that would have been a place to try a short if you were motivated to do that. If you weren't in, you would have needed to see that clear before getting long, because that was long-standing resistance there. So anyways, I would be careful here. At a minimum, just taking objective trading levels, you got support here at 133, then you've got resistance at 134 and resistance back up at 135. And given the price action and the fact that this has barely put in a bounce while the other, the indexes and Facebook and the other ones are bouncing, pretty weak price action. Like I said, I would favor a move back down to the bottom of the box, if not today, and maybe tomorrow or the days ahead. Come back down here at the bottom of the box, and then I think that would be an objective place to try along. If you broke 130, 131.50, then you're back down in here. So that's an important place for it to hold. Tesla, These levels worked out perfect, didn't they? The break below 725, then the break below 707.50, break below 700, right down to 670. Now that's the line in the sand. If you're a Tesla bull, you can be long against 670 for a bounce, but any break of 670 now, then you're back in here. You're back in the low 600 or mid 600, 625 would be the next level that I would be looking at on the downside. Microsoft, second try getting back into the gap, failed, and then it let go pretty hard. Actually came down here to fill the gap right down to 250, actually undercut it a little bit, and now has recovered that level. You could see, you could put your Fibonacci retracements here from 256 down to 249. I would be looking at that 50% halfback short in here to fade this bounce, because obviously at this point you've got the gap down and a follow through. I think odds favor further weakness, and then below 250 your next target is 247, so that would be my downside target after this bounce completes. I would look for weakness right around 252 at the top of the gap, and then wherever that 50% retracement, let's see, where would that be? 256 to 249, or yeah, 256 to 249, $7. So 350 to 49 is, 250, 250 would be your halfback short entry. Look for weakness there between 252 and 250, and see if it doesn't roll over there this afternoon. Amazon special case, earnings this afternoon came down. You actually had the free 50 club execute on the break below 3,500. You got the move down to 34.40. So you got a $60 move right there, and then a nice bounce up. Now, I mean, all the other FATMAAN names, aside from, well, I guess they all beat, some more than others. I would expect Amazon to beat. So we'll just have to see what the reaction is after hours. So anyways, I'm stepping aside on this one, not involved for earnings. Google, nice day, up 1% compared to a really weak market. Here was the gap higher the other day on earnings. Came back here to 23.50 and now is back up again. So if you got long down in this 23.50 area yesterday, you're golden, you're fine. I don't see any kind of compelling short here at all. The only way I would get short Google is if it broke down into this gap right here. And Netflix, the levels worked like a champ. Came down here, tagged support, and now we're getting a bounce. Your resistance level is going to be 507.50. So if you didn't get long here, your next opportunity to get long would be on a recapture of 507.50. And then you can be long against that level with a stop just below and look for 515. What you may see is, I mean, you can see here all the times that 507.50 was rejected. So you might see it come up here and stall yet again. And then, if the market gets weak this afternoon, you may see it retrace, come back down to 500. So that's definitely your pivot point for the afternoon, is that 507.50 level. Want to just touch on MOS, Mosaic. This is a position I took just the other day, and it's down. It's down a 1.5%. But I wanted to tell you, in the option market, there was one trader that bought the June 40 calls 28,500 times, 2 cents off the ask. This is the second time a big size buyer has bought that strike this week. He bought quite a few early in the week. That's what caught my eye. And I think I even passed that along to you on the trade idea. But there's some big guys that are thinking this is going higher. So I'm not letting this, 1.5% little pullback get me scared. I'm going to stick with this. Where you'd have to pull the ripcord is, breaking back below 34. You certainly wouldn't want to see that. But aside from that, I think Moss is going higher. Semiconductors, fake breakout here. We talked about this morning. Fake breakout, break back below the downtrend line and below this 249 key support. Now it's put in a hammer. You may see a little bounce, but taking a step back, price is on the wrong side of the chart, right? It's below the downtrend line and below key support, which now becomes resistance. If you're short, stay short. I think your downside target here is going to be in the 242.50 area. And if it breaks above, you're stopped out. So you've got the downtrend line and 249 as overhead resistance. You may see a little bounce here, but in general, when you see this fake breakout and then big move back below, that's bearish price action. So if you're already short, stay short. If you see a bounce into 249 that fails, a short against 249 with a stop just above would be a nice objective entry for you to try. Okay, it's 1 o'clock here as I'm wrapping up the video. Stay on your toes, guys. Watch for those 215 algos that come out in the afternoon session. Let's see how they handle this little bounce that's going on now. Do they rip it? Was it just a whoosh move and then they buy it back up? Or do they fade the bounce and take it lower? We'll have to wait and see. And then, of course, Amazon after the bell. How do they react to that name? Is it like Facebook? Is it like Google? Or is it like Microsoft and Apple? We'll have to wait and see. So stay tuned. All right. As always, if you appreciated the information, hit the thumbs up. New viewers, I hope you got something out of the quick update to get your levels all ready for the afternoon. Please hit the subscribe button and you won't miss a thing. You'll get all my content as I publish it. Jump over to the show notes where you can register for all my content and also visit the website where you'll find a lot of informative articles that will help you in your trading. So thanks for listening. Have a good afternoon of trade. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.